So welcome back to another video. Today I want to give you guys an update on the USDJPY. If you're new to the channel, I have added USDJPY to the weekly market breakdown. So today I just want to give you guys an update based off the last conversation that I had. Now the last time I spoke about USDJPY, the market was trading below this level, and I explained all of the reasons for why we wanted to see this massive breakthrough. Now today I just want to give you guys an update. If you missed it, just refer back to the weekly breakdown video which I've published on Sunday. We're going to look at some order flow data, sentiment data, fundamental data, and order flow data as well. Now as always, starting on the monthly time frame, what do we have over here? We've got this massive impulse, and after the impulse we had the correction. Now the way to measure the take profit is by taking our Fibonacci from the low to the high. Now we can see how the market tested and rejected the 0.382, which is the first Fibonacci level, as an indication to show that the bullish momentum is quite strong. Now we're going to use the minus 27 over there as our first target, because we can see how the minus 27 also lines up perfectly with that monthly resistance that we had over there. Now on the weekly time frame, what do we have over here? Now if we take a look to the left, we can see how the market is now currently testing a very strong level of resistance, and I'm not just referring to this one that we have over here, but the market is currently testing a strong level of resistance. So a slight pullback from this area is expected. The market had also broken above this very strong level of resistance that is now turned support. Dropping down on the daily time frame, what do we have over here? Now we can see how the market had now broken above the strong level of resistance that I've spoken about, and I've also explained to you guys all the reasons why we could expect this breakthrough to the upside as well. Now what we're going to do now is we can see we had this massive impulse, and after an impulse you obviously expect a correction. Now the way we measure that correction is quite simple. You take your Fibonacci there from the low to the high of the impulse, and we can see how the 0.382 is lining up perfectly with this level of resistance that is now turned support. So there's a good possibility for the market to pull back from here before we can see the market continue higher. Now if you look at the order flow data, so what the big banks, hedge funds, and institutions are doing, we can see here based off the last report, hedge funds previously added 7k longs, and they came back and added another 1.9k long positions. They closed minus 2.4k shorts, and they added 723 shorts, again based off the last report. Now we can also see how the overall net positions is starting to decrease, not from a negative perspective but from a positive, because we can see how the overall net positions went from a minus 102k to now sitting at only minus 52k. Now if you look at the fundamental data, so the news events, so we can see how it says here, excuse me. So the dollar actually gained some strength on Tuesday, and this is purely based on the expectation that the Federal Reserve could raise interest rates as early as March. Now we know, because I spoke about this in a previous video, where we can, Powell had said that they are likely to hike interest rates 3 times next year. So investors are bidding on to the dollar to say that, you know what, we are quite comfortable to drive the dollar, to buy some more dollar, because we know the dollar is going to get stronger overall, and that is why we expect the pullback first before the big move. Now here on the Asian stock market, I think the headlines speak for itself. It says here the Asian stock mix as investors monitor Omicron variant developments. So for the Asian market, they are monitoring the Omicron virus and see how things are going with that first. And you can see with the dollar, investors is like, you know what, we don't really care about Omicrons and stuff like that. We are just there to, we just want to invest because we know the dollar is going to get stronger. Now here from the on the sentiment data, so this is what retail traders are doing in the market. Now I always say the best thing you want to do is to be on the opposite side of what these guys are doing. We can see how these guys are currently sitting at 85% of them are selling the USDJPY, and 15% of them are buying it. So for once we want to be on the sell side, but as always, what we need to do is because we can see, what the market is quite bullish. So the best way to approach the situation is quite simple. Is wait for the market first from a lower time frame to start developing a certain kind of price action before you start taking a valid entry, because the last thing you want to do is just sell the market that's currently this bullish. And I'm sure you got a set of rules that you follow at the end of the day as well. So here's an just thought I'd give you guys an update on the USDJPY. And if you are new here, like I said, please smash that subscribe button. It'd be nice to have you as a subscriber here as well, because I do provide daily content, educational content on a daily basis. And as always, hit that like button, turn on that notification bell, and let me know down in the comments below exactly what it is that you would like for me to cover in the next video. Thank you so much for your time. Cheers for years.